Now, Kenya plans to raise its tax collection by over 5% over the next 10 years to enable the country borrow less funds to finance her infrastructure needs. Treasury Cabinet Secretary Henry Rotich noted that the government is collecting at least 20% of GDP, but plans to hit about 25%. And the move, according to the Cabinet Secretary, will see Treasury review the Income Tax Act by next year, dropping more taxpayers into the revenue tax net. Well, of course, I'll bring you that soundbite later on, but that right there does form the bulk of our interview segment for this first part of the show. Of course, the question being that how exactly has the government performed when it comes to raising revenue in terms of the targets it had pulled out during the budget? Well, to answer some of those questions, Frederick Riaga, Senior Manager Public Policy at ISPAC. Karibu sana.
Thank you for having me.
Yeah, first off, the fact that ISPAC is now taking the trouble to, of course, do the math, to look at the targets set out in the budget previously and check just how the promises, whether they have been kept, how the government, Treasury, has performed in being able to actualize its targets. Why do this in the first place?
Thank you, Akaba. The Institute exists, and then one of its core mandate is advising the Minister of Finance on issues of accountability.
Yes.
And by extension, we said we interact with the National Treasury to a great extent at the point of establishment of the taxation policies every year through the normal budget cycle. Now, for a long time, we have proceeded on the strength that, yes, the economy has the ability to generate the revenues.
Yes.
And historically, when we interface with the Kenya Revenue Authority upon receipt of the revenue targets, and then there is always a cry that the revenue targets set by the National Treasury is not in sync with the economic activities within the country. So it's on that basis that the Institute sought to do a 5-year historical analysis of performance of the various tax heads in terms of revenue productivity, so that going into the future, when we are now when engaging with the National Treasury, then we tell them that yes, we are on a growth path, but not at the rate at which you're seeking to take Kenyans. Yes.
So even from that perspective then, over the past 5 years, or the statistics which you're able to give us, how have we performed in terms of meeting the expectations with which we have set ourselves, even if it's just ballpark?
Wakaba, I would start by saying that Kenya regionally is a success story in terms of revenue yield.
Yes.
When we compare tax revenue as a percentage of GDP across the region, we are faring very high.
At 20%.
At about 23% as we speak. We across the region, we are the top. And in regional meetings where issues of tax reforms are talked about, then Kenya is at the front there. So with that background, we are asking ourselves that, is it just okay to proceed like that? Are there fundamental issues that need to be considered when we are projecting further?
And just before we go out on to those ones, the fact that they say that in a world of blind people, the one-eyed man is king. So regionally, we might be a success stories, but globally, what are the success stories out there that we can use to benchmark ourselves and see just where we are?
Globally, when you look at when you play the economics well, empirically, it is set that when you are doing tax revenue to GDP of close to 45%, then your revenue figures have hit the optimum level.
So quite a long way to go.
So we are saying that yes, we've got a while to go, but as an institute, we can say that the steps taken by government are in the right direction. And then I would allude to now the reforms within within KRA in terms of tax administration. Automating the entire bit about tax administration is helping quite a lot. As we speak today, the KRA, for instance, has about 4.5 million taxpayers records with them. That is a pointer that in future things are really will really get tough for those who would not wish to contribute. And of the 4.5, 2.5 million of those people are actually active taxpayers. So then you see a step in the right direction. So whilst we are saying that we've got a long way to go, we have put in place measures to get us there. I would even compare with us with South Africa in terms of tax revenue to GDP. We are slightly above South Africa, being a more developed economy.
Yes.
So then that alludes to the fact that, yes, as Kenya, we are thinking in the right way to lower dependency on debt to fund our budgets.
We've had experts in here from organizations such as Tax Justice Africa say that part of the challenge for Kenya is the fact that larger supposed taxpayers are not pulling the weight. The fact that larger corporations have found many creative ways to reduce their tax exposure and could be paying negligible amounts in terms of tax. Do you think that is a problem?
It has been a problem, and it's a problem that Treasury is alive to. Let me start by giving a little of the developments in the past.
Yes.
One, when we talked of reviewing the entire tax legal framework, then it is sought to address the loopholes within law that corporations take advantage of to evade paying taxes. You see, we have reformed our VAT Act, and then our study has indicated that with the enactment of the VAT Act that brought down significantly the number of zero-rated goods, then we are seeing growth on the VAT tax head. Then we saw the reform on excise duty act.
Yes.
There is a push by the National Treasury, and I know it's at an advanced stage, for us to reform the broader Income Tax Act, which contributes more than 50% of the total tax basket. So, yes, we will say that there are people who've taken advantage of the loopholes. Then two, there are administrative inefficiencies at the KRA, for instance, that they are seeking to address. Because the legal framework, even if we implemented the law as it is, then our revenue yields may be higher. Not maybe, will definitely be higher, tapping into the informal sector. And then there is this sector again of that would ideally fall under formal, but are not generally contributing anything. People who run businesses, but have devised ways of avoiding it.
Which brings me to my next question. The so-called informal sector, the fact that there have been repeated attempts to first enable these people to formalize, to enable them first start keeping records, to get bank accounts, to really come into the formal financial system and to start to have a sort of a revenue and tax profile. There are, of course, the other sections of the economy that generally would not lend themselves to that sort of thing. And we've seen things like the turnover tax created to enable those ones start to pay their way. Some of these efforts have not been very successful. Do you think we're being innovative enough in coming up with ways to widen the tax net?
Wakaba, I think my intervention towards that question would then hinge on the information technology platform that we are moving into, which will make it practically impossible for me as a business fellow to escape the net. Why? When I buy goods from somebody, the fellow retains part of that records around that transaction. And that transaction is wired directly to the KRA. So whilst I'm sitting pretty, that I may not, the KRA already knows that I procured a given amount of stock, which ordinarily would be outside any framework for domestic consumption. So in effect, then I'm saying, once we can strengthen the system of iTax, once we can allow the KRA access to, we take a more integrated approach to database management, allow the KRA, for instance, to gain access or direct link into the land's records, gain access into bank accounts which the law empowers them to, then we will see more and more participation of people who have the disposable income and the taxable income into the tax.
You're talking about basically information sharing.
Yes.
And the fact that this scares a lot of people. We have different organizations in this country in charge of different bits of information, which together would make a lot of sense. For example, on the one hand, we have Kenya Power, which which administrates a database with meters. They have names, addresses, things which can be used to track bank accounts. They have different payment platforms. We have Safaricom with M-Pesa, and the merchant system it has rolled out. We have institutions like the catering levy and so-called development trustees. They administrate a system where they receive 2% of what hospitality institutions in this country make every month. How come we're not seeing these organizations putting all this information into one bowl and then enabling, so to say, the synergy that it would create?
Yes, Mr. Okaba, when I talked of possibly the KRA not applying the law as it is, that is an instance where we've always sided with them.
Yes.
I would go out and say that rental income, for instance, which was reintroduced 2 years ago, and with the tax amnesty running and quite a number of people not coming on board, and we ask ourselves, why would we consume resources to do mapping of rental property across the country and the institutions of government, be it national government or local government, that we can create synergies with. And the case in point is the water companies.
Yes.
When I put up a block of flats, each unit would have a designated meter, a designated account. So for me, it's a case of the KRA reaching out to such institutions for information about who is procuring.
So why do you think this is not happening? And here, although calling to speculation, but the fact that it would seem that there is really a sort of go slow to start to implement some of this. And I say this in the face of the fact that Kenya has borrowed massively at the international level to finance infrastructure and such. Yet we have some of these resources basically lost in the gray areas of the economy.
Can I attribute it to capacity?
Yes.
Which we have since now seen getting better at the KRA. So the excuse for weaker capacity to administer the taxes has been erased from the KRA list. Then going forward, as a Kenyan, I would see more participation of what the people who have been running away from the sector.
Yeah, so very quickly, my last question is in terms of national savings or the lack of it. A lot of Kenyans don't save, especially the long term, meaning that we are borrowing massively at the international level for projects which essentially should be funded internally using cash, which should either be sitting at NSSF or rather pension administrators and that sort of thing. What do we need to do in terms of at the national level, even if it's policy, to enable Kenyans start putting aside something for a rainy day?
Starting off Kenyans, I think for a long time the savings culture in Kenya is really low. That is a fact. And the question that I'm asking is, and I've always asked is, has there been an incentive for me to put my resources in a scheme somewhere? Have we stronger governance institutions to oversight them? So that could contribute to Kenyans not putting the resources in. But that having been said, I think and then when you allude to us borrowing more from the international market as opposed to the domestic market, there is some sense in the government not running into the domestic market to crowd out businesses out of capital to what? To enhance the business operations. There is a lot of sense in government going internationally to borrow money at very concessional rates. So then they leave the domestic market for the private sector to borrow from, to advance business cases, which then gives us an opportunity to widen the tax base.
Okay. Thank you very much, Mr. Fred Riaga, Senior Manager Public Policy at ISPAC. Thank you very much for your time, sir.
Thanks for having me.
Okay, so on that